Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Friday the 14th of June 2013. Well, it's a much quieter day today. What we've seen overall has been the yen trading in a very narrow range. Stock markets are in recovery mode. Remember, we had some steep losses yesterday, a very volatile day, certainly during the European session. Things obviously picked up in the US session when we got these better initial jobless claims. Now, remember, we're at the end of a week and we are leading up to a massive week next week. We've got the Fed meeting is the key thing. That's going to be the key director going forward. And everyone's looking at that. So it's no surprise that things are a little bit quieter. Now, with that rise in stock markets, we're also seeing the dollar get its groove back just a little bit. We've seen big recoveries also in some of those risk-sensitive assets, emerging markets, also the Aussie. So this risk-on-off theme very much in place still, and today we are in recovery mode. Let's take a quick look here at dollar yen. As you can see, trading in a much narrower range than we've seen in a while. Remember, we had those sharp declines. We moved over 200 pips just yesterday morning. Well, the volatility has really sunk to a very low level in dollar yen today. So what we've seen instead is a tight range. 93.60 is still very much the low. Remember, that's the 38.2% fib retracement of that up move, of the whole move from early June, or from November all the way up to early June. So we've only retraced 38% of that move if we get down to 93.60. So there's no surprise there that that support is holding. That would be a massive level that everyone in the market is looking at. And indeed, it did hold yesterday, and we have bounced off it, as you can see. We are trading in fairly narrow range. 96 is the top. So we haven't been able to get above there, and really we haven't really moved too far, to be honest. We're currently just around about that 94.90 to 95 level, 94.40, then 94.70. Short-term supports on the downside. But as I said, as we lead up to the FOMC meeting, which will be the next major driver for this cross, it's going to be the medium-term driver for this cross. It is no wonder that we're fairly quiet in dollar yen today. However, don't let that fool you. When you get narrow ranges, as we've seen in dollar yen, they don't always persist. So if we do see a surprise coming out of the FOMC, then we could easily see a big bounce one way or the other. But do join us next week for more about that. The other thing that we're looking at as well is the Aussie. The Aussie was one of the hardest hit currencies over this week, but we've seen a nice bounce in the last couple of days. In fact, it was the first currency to actually start recovering yesterday. So it's a good lead indicator, and I'm keeping my eye on Aussie quite closely. As you can see though, we've got above 96, 96.60 is a massive level on the upside, and then 97. So we are watching that. Likewise, again, on the downside, we had been below 94 at one point, but we've managed to just claw our way back. So it looks like 94, nice bottom there, and a nice short-term low. So again, trading in a range, but with a nice bullish bias. So overall, good luck trading today, and please do join us next week for more. Thank you.